What's up, Bad Talk family? Welcome to another episode of the Bad Talk Show, man. So today we're going to tell you exactly how you can actually buy your stocks for the long-term and short-term side. And we're going to show you this because we're going to take over the technical analysis world and we're going to give you all the details of what people in the actual finance field do. So you have it right in front of you today. But Rel, let's kick it off, bro. Everything we share will be in the description below, but just comment any question you have and we'll be sure to answer it. So it's your world, bro.
Definitely, because technical analysis is literally what people use to say, like, yo, what's the best time to buy a stock? Because you don't want to get it at the wrong time and you're buying it at a high price just to see it drop on you. And a lot of people experience that in this bear market. But people who understand this, they got out at the top and they're buying again at the bottom. And so I want to make sure Bad Talk family understands that. And so I know you're probably looking at this screen like, what the heck is this? This is a website called TradingView, and all the people who trade probably know a lot about what we'll talk about today. But this are people who don't trade. But you guys need good prices too. So for the S&P 500, we talked about that on this channel. It's basically telling you the price of the overall stock market. This is the chart that people use to see how the actual market is doing. And so basically, if you're looking as you see directionally, if things are moving upward to the right, that means prices are going up. That means the overall stock market is going up. If you see things start to move downwards to the right, that means that prices are starting to go down. So literally looking at it from left to right, left means you're going back in history. The most right side of the screen means that this is the most current price that the S&P 500 is at this exact time. So the index, the S&P 500 index right now, as of the recording of this, is priced at about 3970, right? 3,970. That's where we are right here at the end of this blue line. So remember, directionally, that's what we're focused on right now. So you as a person who's trying to buy your stocks, you don't want to buy stocks. How about if you guys would have bought stocks right here? Let me show you. Imagine you bought stocks right here where this smiley face is on the screen. Imagine you bought stocks right here just to see your stocks drop all the way down to the bottom. So you got out at the bottom, you sold for a loss. People who understand this literally bought it at the bottom and they're in profit all the way up until now. Even with a pullback, they're still in profit. Mm-hmm. You want to be one of them. And so you have to understand like what a market trend is. The market is either going higher or going lower, right? And when the market is going higher, it's comprised of higher highs and higher lows. So understand, nothing goes straight up. As you can see directionally, right? Although we are moving up, it's moving up diagonally, right? You see it goes up, down, it goes up again, it goes down again, but generally it's moving upwards and to the right.
Yo, so quick question, right? Can we zoom out really quick?
Yeah, for sure.
So guys, let's just make sure that we're going slow here. And just for my people who are going to go to TradingView and try to follow along, bro, the chart doesn't always look like this, right? It's usually candlesticks. So can you just go to the main view really quickly?
Yeah, for sure.
This is what you guys will see usually, right? And I know it might get confusing, so we wanted to make sure that you guys are looking at it from a candles perspective first, which is this right here. And then, Rel, can you show them where they would go to actually change it back to the blue line so they don't get confused?
Yes, great pickup. So when you go to tradingview.com, first of all, to even start from the beginning, I'm glad you said that, is you would have typed in SPX to understand the S&P 500. It will pull up this screen. Once you type it in right here, you will type in SPX, it will pull up this screen. Okay, and then to get to the line chart, which is what I was originally on, you see this icon right here. You click on that, and then you go down to the word line, you click it, and then they will show you the line chart.
Now this is perfect, right? So, bro, zoom out for me real quick. I just want to make sure this is super, super clear. So, yo, guys, just look at it from, can you go to March of 2020, bro? Like right at the bottom that you see. So right here, right? Guys, as Rel just said, the trend, right? The market structure, it's going to make higher highs, higher lows. So that means we're headed in a positive direction, right?
Yep, for sure.
Can you just explain to them really quickly by actually illustrating it on the screen and showing them exactly what higher highs, higher lows look like? Because I can see it clearly, but for someone who's trying to watch this, what does that actually look like? And then after you show them that, I'm going to ask you to pause really quick, and then we'll show them lower lows.
Yeah, nah, most definitely. So I got you. So I wanna show it like this. I'll move this off to the side because it's easier to visualize without that. So look, an uptrend, right? We're moving up. It should look like we make a high, price comes down and makes a low, but this low is higher than the previous low. And we make a higher high, which is higher than the previous high. Then we make a higher low. Then we make a higher high. We make a higher low, we make a higher high, and so on and so forth. That is what a standard uptrend looks like. So even though we made certain lows, each low was higher than the last low, and each high was higher than the last high.
And just perfect example, literally, I don't know if you can do this. Can you copy that and drag it over to the right or to the left at all? Yeah, you can, right? Bro, so guys, if you literally just look at it, does it not look pretty similar to what we just said? Like Rel just drew this illustration, and it's low-key matching pretty much exactly what we were doing in that bull market, right? People were making higher highs, higher lows, higher highs, higher lows. And this is where Rel is going to show you in 2 seconds when you could tell when a market is switching directions, right? When there's no more of higher highs and higher lows, it makes a higher high, but then it makes a lower low. So now the trend is switching. So can you show that to the people?
Yep. So as we said, right, this is our uptrend. We're doing this. And then out of nowhere, after our last high, eventually we make a low that is not a higher low. We make something called a lower low. Why? Because the low that I just made is lower than the most recent low. Therefore, that's an indication that the structure of the market may be shifting to the downside. Once you make a lower low, nothing moves in a straight line. You got to make a lower high than the last high. Then you make a lower low than the last low. Then you make a lower high than the last high, a lower low than the last low. Lower high, lower low, lower high, lower low. That's what the downtrend consists of.
And now, bro, do the same thing. Just go to the left and zoom out for me.
Release the old one. And then, yep.
And now y'all see what he just did is basically making lower lows, lower highs. And yes, sometimes we go up in a bear market, but that doesn't mean that we're all of a sudden switching. It just means we made a lower high. It didn't beat the previous high, right? So that is what Rel was trying to explain to you guys of what the market trend and market structure really looks like. So the reason why, and correct me if I'm wrong here, bro, the reason why S&P 500 is such a powerful tool when it comes to this stuff is because if the top 500 stocks, the best known stocks, right, are making a chart, a whole basket, which is very heavily going to influence the market, this is most likely going to show you and predict what's going to happen to individual stocks and other sectors and other indexes, correct?
Yeah, for sure. Everything comes back to this. That's why even when I chart before I do my trades, I always start with the S&P 500. I want to see what direction do I believe it's going to head into. So if I feel like it's going to go down today, the stocks that I trade individually, I know they're going to go down today as well, 9 times out of 10.
Now, speaking of that, this is what I want you to do really quickly for the people so they understand it, right? So guys, if you guys think about it, we always talk about big companies, right? You want to follow the money. So S&P 500, some of the biggest holdings are Apple and Microsoft, right? So if you think about it, the way that this stock looks, if we pull it side by side, I'm pretty sure Apple and Microsoft is going to look somewhat similar. And the reason being is because they control what the S&P 500 looks like most of the time, right? It's a pretty heavy influence, I would say, right?
Yeah, it's definitely a heavy influence. So the charts tend to look somewhat similar. So if you remember the S&P 500, we had a really strong run up after COVID, right? This is March, a really strong run up. And then it started its downtrend, just like you see here. When I zoom out, you'll see it looks a lot clearer. Let me erase my old lines. You see, this is S&P 500 one. And then you see, this is what Apple looked like.
Is there any way to make them go side by side?
On my other account, the paid version lets you do that, but not the unpaid version. So on
Got
my,
you, got you.
I would have to go a different browser.
No, no, it's all good. Okay, and then can we show that Microsoft as well? I think, is that similar?
Microsoft should be similar as it's the second biggest holding the SP 500.
And then it is.
Yep, they look really similar, eerily similar. This one looks even more like the SP 500 than Apple does.
Exactly.
Yeah.
Exactly. So now, hopefully, you guys understand this. If you didn't understand it, please comment below. If you were liking this type of content, please make sure you like this video because that helps us move forward. But now, Rel, you want to go into more detail, bro, of how support and resistance works and how this goes with directions?
Yep, for sure. So you can use the candles for this, or you can use the lines. I'm gonna stick with the lines because it may be easier for beginners to see. But if you guys notice, right, like on this chart, nothing is super exact, right? But just general areas. When you notice that price came to about $313 on Microsoft, price rejected there, right? So let me
make that real quick. Can we just make that a different color so it's more obvious?
Yep.
All right, perfect. Thank you.
Yep. And then let me do that same thing for the path tool because I want to show something with that. So I want you guys to pay like real close attention here because this is important, like extremely important. This is going to tell you exactly when you really should be buying and selling your stocks. And so if you notice that there's a certain level that price tends to reject at, then when price goes back to that level of price, you should potentially be looking to sell some stocks or maybe take some profits off, because sometimes you don't always have to hold positions for 20 years. There's certain stocks that we call you want to swing trade, which means you might buy it in January and sell it in March, or you want to buy it in January and sell in December. Like, you choose your time period. So you might buy a stock down here, right? And then sell it when it gets back to the white line. And how would I know to sell it when it gets to the white line? Well, look, guys, like last time it hit the white line, it rejected. It came down. It came back to the white line. Let me do my arrow so you guys see what I mean. It came to the white line, rejected. Came back down, back to the white line, rejected. What do you think is going to happen when we get back to the white line? It's going to reject, right? So what happened? It ended up rejecting and prices went down.
And real quick, I know sometimes it can get confusing, but for reject, all he's really saying is it was just a sell-off. That's all he's saying.
Yeah, exactly. Because price came up to $313 and then price plummeted and then came all the way back down to $270. So imagine you were holding a position where you were in profit and you watched it turn negative on you. Mm-hmm. That's exactly what we mean by that. So the way to figure out like if something is what we call resistance, because price is resisting to go higher, is you want to find places on the chart where prices trade up into and reject at the same level at least 3 times to call it a resistance level. And the same thing for support. You want between 2 to 3 touches where when price usually gets there, it'll bounce up. So for example, right here, I could say, all right, price bounced on this level right here. I'll show you with the arrow. We got once, it came up, came back twice, right? I'm keeping my eye on that level. Now, when we look to the right, price has memory. That's what we say, price has memory. Price came back to that white line finally. What did it do? Bounce, right? Came back to it, bounced again and skyrocketed. So,
I'm glad you said this, bro.
Yeah, so if a person were to buy a position down here at $276, because usually when Microsoft hits that price, it tends to go up. They could try their hand at that and then sell it at the next resistance, maybe.
Right? That's it. As simple as that, guys. So just zoom out for me real quick, bro.
Yeah.
Because I want to move on to a couple more things because I don't want to take up too much time for people, obviously. And it's obviously beginners, right? But just zoom out and look at what he's showing you, right? That we want to use this view because it's going to show you clearly support and resistance. And we want you to practice this and ask us questions as well when it comes to this, right? And a lot of people tend to use indicators and a lot of people use volume, et cetera, et cetera. But this is just a great start for you guys to how to understand, when is the right time to buy a stock? What does it look like? What are the trends? What is the support? What is the resistance? Bro, I want you, bro, to please go to Yahoo Finance now, so we can explain to the people what volume looks like and what that means.
Yeah, yeah. And by the way, guys, when it comes to technical analysis, like Newski said, there's a lot we have not said. Like, I don't even use support and resistance. I use something called supply and demand. And that's something that if you want us to talk about it, please leave a comment. There's so much. But yeah, Newski, what do you want to talk about here on Apple?
So in less than a minute, right? Just do me a favor, very, very straight to the point. Can you just explain to people what volume means?
Yeah. Volume is just showing how many shares of this stock were traded throughout the day. And so for Apple, for example, on Friday, Apple, there was 55 million shares of Apple traded throughout the day. But when you look at the average volume, usually there's about 75 million of Apple traded throughout the day. Usually per day is 75 million. So when you see something like that, like, man, the volume is low today, usually that means that there's going to be not really a direction picked on that stock. And so we're talking about Friday, right? If you look at Apple on Friday, you'll be able to see, was there a direction picked on Apple on Friday? Does not look like it, because the Friday candles, which are this, I'll put a square around it, so a rectangle around it, so you guys see. This represents what Apple did on Friday. Price pretty much stayed within a range. It went up, it went down, it went up, it went down. It didn't go anywhere. And that's because the volume was low. Because we usually trade 75 million. We only traded 55 million. So on days like those, you kind of don't want to trade and kind of want to stay out the market.
Exactly. And for my long-term people out there, this is not going to mean as much for you. But if you're for my swing traders, this is going to matter for sure, right? So you want to get in at the right time. And for my day traders, obviously, y'all know the deal. This is going to matter a lot for you guys. And then let's go over another popular one, bro. Can you just go to bar chart really quickly?
Yep.
So let's talk about what RSI means exactly and what that actually means for traders and what that means for long-term and short-term people.
Yeah, so for RSI is a relative strength index, and that's basically going to tell you if a stock is being either overbought or oversold. So you don't really want to buy a stock if it's being overbought, because that probably means you're buying it at a premium, right? It's like, imagine you guys see like a TV that you always wanted, and that TV is worth, $500, but today you see it worth $700. You're like, I'm not going to pay that much for it. You want to buy it when it's on sale, rather, when they're selling it for $300. Get it on Black Friday when they sell it for $300, right? And so that's kind of what RSI will tell you. Am I paying a premium or am I buying it on sale? So for RSI, this is on bar chart, by the way. You can go to bar chart and type in RSI for whatever stock. And we're looking at the RSI of Apple right now.
Mm-hmm.
And for the past 9 days, Apple's RSI is 41%. Mm-hmm. So that's actually close to 30. When RSI is 30, that means that it's oversold, or close to 30, it's typically oversold. When it's around close to 70, that means it's overbought. So you want to pay attention to those numbers. Buy stocks close to 30, sell stocks close to 70.
It's as simple as that. That's a great definition, bro. And honestly, look, guys, like, we want to give you guys these tools so you guys can research them yourselves as well. And remember, this is a very, very surface level view of what technical analysis is. But to be fair with you, if you're a long-term investor, if you just use trends, support and resistance to buy at a good price, it's going to pay dividends, right? And this is going to help you along the way, even as a trader, as a swing trader, or long-term. And that's our goal. So if you like this type of video, you like this type of content, please let us know by commenting below. Any questions you have, please put them in the comments. And shout out to Rel for walking us through this, because I know it's very hard to explain to beginners sometimes. So I think that he did a great job of that. But like always, please make sure you like, comment, and subscribe to the channel. Plus that little notification bell, because we drop
2 videos a week.
You don't want to miss them. Make sure you check us out on Wednesday. But until then, peace.
Peace.
Soundstripe.